Buying a home self-employed can seem like a defeating or impossible process since most banks or financial institutions require tax returns. And if you are self-employed, you may file zero on your income to save money, or you may not file your taxes at all, and you need an alternative option to buy a home. I'm going to talk about 4 ways you can buy a home with no tax returns if you are self-employed. But before I get started, please hit the like and subscribe button and stay connected for valuable content and information such as this that I'll be sharing on the channel today, and also to get access to resources on creative ways you can buy a home in today's market. Let's go. So there's 2 categories that I like to share with you today out of the 4 types of ways you can buy a home if you are self-employed and don't have tax returns. You can buy a home with non-prime, or something also known as non-QM, which stands for non-qualified mortgage. A non-qualified mortgage is a type of mortgage that doesn't meet the Consumer Financial Protection Bureau's guidelines for qualified mortgages. Non-QM loans are designed to help people who might not qualify for traditional financing, such as those with irregular incomes, like self-employed workers. Obviously, that's what this video is about today. If you are self-employed, non-traditional credit histories, like if you have some history with your credit that could interfere with you getting approved, this will be an option for you. Higher debt to income ratios as well. So if you are someone who has you make good income, but you do have a lot of debt, this type of option will work for you, as well as recent credit issues such as bankruptcies or foreclosures. Example I'm going to share today is alternative documentation loan, which brings me to option 1, which will include bank statements, profit and loss statements, and use of assets qualified for a mortgage. These are all alternative documentation loan types. This will allow you to only provide either a bank statement or a profit and loss statement to qualify for the loan. Also, if you are a borrower with assets, including other properties that you may own, you can utilize your assets. Some lenders will allow you to use your asset to cross collateralize by putting a loan against that asset or those real estate assets in order for you to purchase the new home that you're trying to purchase. These assets would typically have to have a substantial amount of value or equity tied to it in order for it to be used. Next, I would like to talk about 1099 mortgage. This is option 2. Option 2 is 1099 mortgage loans. And if you're an independent contractor, most like real estate agents like myself, loan officers, as well as other sales agents, might be an independent contractor, and you may receive a 1099 at the end of the year to file your taxes. If you haven't filed your taxes using your 1099, there are some lenders that will allow a 1099 loan mortgage where you can use your income on a 1099 to purchase a home. So the second option, or the second category, is creative financing options. So first, let's talk about what creative financing is. Creative financing in real estate is a non-traditional way to buy property without using traditional lending. So an example would be owner or seller finance. This is where the seller acts as the lender, providing enough credit to cover the purchase price minus the down payment to the buyer. The buyer and seller sign a promissory note that outlines the terms of the loan. The key here is to either work with a realtor who's great at negotiating, or if you are negotiating yourself, you definitely want to use a title company that is owned and operated by an attorney, because the attorney of the title company will not only handle the escrow process, the title work process, but they also help create the note. They will write the promissory note with the legal terms, spell it out for you and the buyer, or if you're the seller, whoever the parties are involved in the transaction, you'll be covered with this promissory note that is created. Another creative way to purchase a home, if you haven't filed your taxes is lease purchase or lease option. They're not exactly the same, but very similar concept. A lease option agreement is that the lease option only obligates the seller to sell and gives the buyer an option to purchase, which is pretty much tied up in the agreement. And in the lease purchase agreement commits both parties to the sale of the contract. These are all alternative ways you can buy a home without taxes if you are self-employed. Keep in mind that these options will have a much higher interest rate. So if you are looking at any of these options, they're going to have a higher interest rate. You're going to run into that. You're also going to run into the fact that you're going to have to bring at least 10 to 20% down to the table for closing costs. So if you are in a situation where you are self-employed and you haven't filed your taxes, you probably don't plan to file your taxes or it's too much of a hassle to do it, and you're in a situation where you want or have a desire to purchase a home, you're just looking for an alternative way to do so, I've placed my phone number here on the video where you can text the number and I can help you get that done. I can help you provide the resources that you need to buy a home using creative financing strategies and solutions. I also have a network of real estate agents and loan officers that are on standby in the event that you are located in a particular state that I'm not licensed in. I will get you connected to the right real estate agent and loan officer as needed to help you accomplish or achieve your goal. Until then, don't forget to like, comment, and subscribe to the channel so that you can stay engaged and receive access to the content similar to this and to learn more on creative ways you can buy a home in today's market. Until then, see you next time.